everybody, it's me, the Einstein of Wall Street, out front of the New York Stock Exchange, corner of Broad and Wall, corner of Walk and Don't Walk, in front of the greatest financial institution in the world. This market has seen absolutely everything thrown at it in 2025, yet it trades at record highs across the board. We've talked about it. Tariffs, couple of global wars, new administration, earnings, guidance, lack of it, interest rate cuts anticipation, right? We just closed out the third quarter yesterday. There was a $4.5 billion buy program on the close on the last day of a quarter. You realize that historically, when a market's trading at record highs, we have had now 29 record closes this year in the Russell, the S&P, and the Dow, and the NASDAQ. Right, last year, 218 trading days, we had 58 record closes. We're going to blow, I think, that out of the water because we've got this enthusiasm around the markets. Everyone's buying everything that's not locked down. Gold trading at record highs. Crypto, a little bit weaker, but still, everyone's getting it. Mag 7, all tech. I mean, it's just this enthusiasm. I actually saw an interview with the CEO of SoftBank, who said that Nvidia, so we're here, of course, with my man Dan Ives, #1 tech analyst in the world, in my opinion, right? Mag 7 Maestro, that's his new nickname, okay? The Mag 7 Maestro.
Oh my God.
The CEO of SoftBank said that Nvidia, at the level where it's at now, up 180, it's at 183 and change, right? We know that February 2023, it was a $108 stock. 2024, it was a $900 stock. By June, it was $1,200, split 10 for 1, $50 billion buyback. Forget about it. Okay, he said that Nvidia is undervalued.
But we've talked about, I mean, because look, there's one chip in the world,
right,
fueling the AI revolution. They're still years ahead of Huawei.
Right.
And you think about where we are with AI, like only 3% of US companies have gone through it.
Okay.
None in Europe, none in Asia, ex-China.
Okay.
Middle East just starting with sovereigns.
Okay.
So like when you start thinking about,
you mean in their investment in AI or in their actual AI companies?
That are actually starting to invest in terms of real investment.
Okay.
So today it's really only been big tech.
Right.
And I'd say some of the more leading companies out there.
Right.
What's starting to happen now is that rest of the world starts to catch up.
Right.
For US, that's a boom.
Yes.
Because US for the first time in 30 years is leading
the way on that. And we know that, look, we've talked about it also, that we've had some bumps in the road when it comes to that because the administration is sort of like, not allowed the chips to be sold. Then there was the Huawei thing and then this and that. Net at the end of the day, with that commitment that the CEO of Nvidia has with the government, with Intel, with everything. I mean, we're also seeing the capex from Microsoft, Google, Meta, Oracle, right? It wasn't Oracle's earnings that made it go up $100 a few weeks ago. It was the fact was at the end of the conference call, they talked about their commitment to investing billions of dollars in AI.
But it's clear where like Oracle is a good example. Like the market was underestimating what was happening. And I think, look, we'll have continued sort of volatility.
Right.
But I just think the path for the market's higher because 3Q earnings, you're going to get more evidence that tech spending's actually starting to happen in terms of software, cybersecurity, rest of tech, semis, AMD, Broadcom, others.
Right.
So I actually think what's starting to happen is now it's spreading.
Right.
Infrastructure, energy.
Right. So one of the reasons that they said it was undervalued was that if we think about the demand for the chips and the demand for data centers for the future, if there is going to be any way to even begin to keep up with that demand in the future, we haven't seen, as you always say, it's the second inning of a 9-inning game that's going into extra innings. We haven't even seen the beginning of what this can be. And think about it. Once we start, this is a story that it's got the more we go along on the journey, the more we're going to grow. It's almost like machine learning, right? The more we're going to learn, right? Isn't that?
Because think about like autonomous,
right?
Robotics,
right?
Consumer, like that hasn't
use case, consumer use. That's a whole nother, right?
So enterprise, like right now, like we're just starting the enterprise piece,
right?
So it's my view that like we're now like creating the foundation for what the world's going to look like for the next 30, 40, 50 years.
Right. So we're not going to be looking like the Flintstones. We're going to be looking like the Jetsons.
It's like me and you've talked about. It's just like this is real where we're seeing.
Yeah.
And even though it's big tech that have really been the winners,
right?
When you look from Palantir,
right,
to Oracle,
right,
now to AMD,
right,
to Broadcom, TSMC.
Those are the secondary, tertiary derivatives.
But it's all part of the Ives AI 30. Like
right.
everything we talk about, it's about the 30 names.
Right.
But what's happening is that it's spreading across the rest of tech.
Okay. Talk to me about quantitative computing. We know that is a sector that was a nothing burger for a while. Then it got super hot. Then Jensen Huang came on and said it was not a 10-year away situation. It was a 30-year. The stocks got decimated. They are now once again the flavor of the moment. What is that sector about? How does it relate to AI? And what's your view on the whole thing?
I view it as it's a derivative of AI.
Of AI. Okay.
So as the acceleration in spending happens with AI,
right,
quantum, you're going to have more quantum use cases.
What is quantum? Explain to me.
Like,
what does it mean?
Quantum is really, when you think about the concept of supercomputers,
right,
and the concept of really like, what I believe is like reaching true S-curve potential for technology.
Okay.
That's really what quantum does. I mean, quantum's similar to a nuclear.
Coding on steroids or something?
Quantum is almost like what nuclear
is to energy.
The atom
right,
bomb
right.
was to energy.
Okay, gotcha. So it's to the next level. Okay, so we're at the end of the third quarter. We ended the quarter up. There was no seasonality.
Yep.
We ended the quarter at record highs across the board. We know that there was a number of factors that helped that happen. There was money on the sidelines that was under investment, right, by a lot of the big guys who were selling February, March, April when they should have been buying, and they're having to play catch up. I think that $4 billion buy program that I saw on the close yesterday was a little bit of that, because nobody could go home last night and be able to face their customers, right? Their clientele, and go, I was not fully invested in the stock market, right? I mean, it's like,
and that's also with like government shutdown that started at midnight. If you go back historically, right, a lot of times government shutdowns like
send the market into turmoil.
Because I think investors recognize, like, look, if it lasts a month,
right,
it takes off 0.5% of real growth. So there is, if it lasts long,
right, it will impact the market.
It will impact the market. But investors are almost separating out between what's happening here,
okay,
and what's happening in terms of tech,
the economy, the market.
Because I think almost there's really two different economies going on. That's really
explain.
There's the tech economy,
right,
where you're seeing spending. You're going to see more spending in the next 2 years in the last decade,
right.
But then when you look at like traditional economy, jobless claims, things like that, it's not a recession, but it's trekking.
It's struggling.
Fed clearly was behind, probably by one meeting.
Okay.
They're going to have to continue to cut.
Right. Couple more cuts by the end of the year.
Rates are still pretty high.
Okay.
So you're waiting almost for like the old economy to catch up with the new economy.
The interest rate, so we're in the beginning of an interest rate cutting cycle now. Finally, after last year we waited till September as well. Although last year we did get a 50 basis point cut initially. Market's response was very negative initially. We sold off 1,000 points last year because there's that weird paradox. Why is a 50 basis, people looked at a 50 basis point cut after not cutting all year long as a potential that maybe they know something we don't know, and the economy is softer than we think it is.
Because that's what me and you have we've agreed to disagree with the whole 50 bips versus 25.
Right.
Because my view is 50 is almost like everyone stay calm, but there's a fire in the theater.
Right.
So 25 is a little, we're on the right path, but it's kind of like steady hands.
Okay.
And I think that's always the issue with the 50 bips cut.
Okay. Right. Okay. That's interesting. Okay. But look, there is a historic data around once you start a interest rate cutting cycle and it goes on for a year. Apparently, at the end of that period of time, historically, markets have been up as much as 16%. So it is a bullish case scenario.
And I think it just adds to the bullishness, money off the sideline and everything else, in terms of where we ultimately head. I mean, that's sort of my view in terms of just this cutting cycle and what that's ultimately going to do.
How does interest rate cutting affect the tech sector? Are they now more likely to start spending money and borrowing money again?
That's
for R&D and other things?
100%.
Down from literally a 25 basis point cut will be enough of a thing to get people
but it's
to what is it called, to unleash money again?
But it's where it's ultimately going, because when you look at, like, Oracle did a bond deal last week.
Okay.
I think that's just the first start of more and more of those types of deals.
Okay, so money's being released.
Yeah.
And
look, and I would just sort of, in my view, I'd sort of sum it up and be like, tech is going to be a strong 3Q earnings season.
Okay.
There will always be like worries about like sustainability.
Right.
Fed cutting creates more of a risk on trade.
Okay.
Government shutdown creates some volatility, and we'll see where that goes.
Right.
But overall, it's like I told you, like I think that the path's higher going into year end for the market.
Okay, look, I printed up the S&P 7,000 hat. You promised me there was a 7 in front of that number.
It's a pink.
It's
S&P,
a pink S&P hat.
It's a pink S&P. It's
with
like
a 7 on.
It's like our Epic hat.
We got to get those done. Okay, we closed out the quarter. You were really satisfied with the way this quarter went, right? You and I, look, we lived through that self-inflicted economic Armageddon that we had. You and I both were when we were in it. I think we learned a lot from this past a few months ago, because I think you and I both look back at that. We talked about, are we going to look back at this as a time we should have been selling, or was this once again a buying opportunity? And I think we thought it was more of a selling opportunity. For me, I didn't feel comfortable in putting myself into the mind of the new sheriff in town, and so I didn't know what.
But that started to change toward the end of April. Remember,
correct. Once that reversal happened, we ended up reversing beautifully.
And once you started to realize that they were going to negotiate, that was the key.
And we talked about that. We also said, what is it going to take to get the market back on track? It was checking off deal, done, right? A lot of backdoor diplomacy has been going on. While we've been off busy doing other stuff, they've been making deals.
As well as also, there's a game of poker going on between U.S. and China.
Right.
As that all plays out, too.
Are they the last holdout in the tariff world that we don't have any real...
It's tariff world, but also in terms like arms race, chips. Like, I think that continues to be extremely important, as is U.S.-China deal. TikTok being one chip on the table starts to play out.
Has the relationship between China and the U.S. Ever been better than this?
It's been better, but I think it went from contentious to now getting a lot better.
So it's like we're heading in the right direction.
100%. And it's not just because of the music in the back. Like it's really getting me into that that kind of 80s sort of yacht club feel. But I feel,
anyone have a cocktail, please?
But I feel like it's a little yacht music kind of yacht rock. I feel like we're starting. What I believe is we're gonna have a real strong few months, and hopefully you also get good news from U.S. China.
So U.S.-China, good news. Earnings are going to be good into the fourth quarter, and there's such growth, there's such enthusiasm. You've got literally a whole new generation of people. Like, you've got Nvidia earnings watching parties, right?
Yeah.
When people used to sit around and watch the Golden Globes together with friends, there are so many eyeballs on the stock market. Right? This could not be a better time for you and me to be out there trying to motivate and inspire younger people to get involved with the market and their future.
Well, because it's the fourth industrial revolution that's taking shape, right? I mean, that's just a reality of what we're seeing play out in front of us. And I think investors continue to underestimate what this AI fourth industrial revolution is going to look like.
Yeah, I agree with you, my man. You know what?
Dude, and also, I'd also say, like, I mean, the last Nvidia watching party, you had caviar at yours.
Yeah.
So the point is, that was a bullish sign.
That was a bullish sign, my man. It is a bullish sign when you have caviar at an Nvidia watching party. Anyway, ladies and gentlemen, we got through third quarter. We're embarking on the fourth quarter. There is money still to be put to work. The market feels right. We're starting to see IPOs really start to rev up. So all the signs are showing that we're coming into the end of this year. It should be really good. I mean, look, we know we're a tweet away from crazy town. Anything can happen. And as Dan always says, there are going to be bumps in the road and pebbles in our shoe along the way. But net, the story is solid, right? The money behind it, it's enthusiasm. And it's somewhat irrational at times, but at the end of the day, we're in good shape. And it's beautiful. I love you, man. That's all you got to say about that. This is the Einstein of Wall Street with Einstein and Ives from Money News Network. Boom, that's all I got to say about that.